Art Collins here with a question. Can this trading system really be as good as it looks? Pretty gosh darn good looking system. It's a day system only, no overnights. It spans from the beginning of 2010 through August 28th, 2020. $401,000 profit off 3986 trades, 80% accurate. 2450 worst drawdown. Giving you a ridiculously eye-popping 16,389% return on account. Look at it yearly. You see that almost all the work is being done in this crazy 2020 hyper-volatile environment. A lot of systems are working now. I might urge you that if you think that this sort of market activity is going to continue, you might want to weigh your research far more heavily into the last year than you do like the previous 4 or 5. But whether you're right on it continuing or not, it's anybody's guess, I guess. So, anyhow, what about this? Well, I think you've already guessed that this is another one of these don't let this kind of thing happen to you. Don't get fooled in your research. So what's the deal? This is what you get when you just look back to the start of 2020. Your average trade amount is doubly impressive. Your drawdown is better. Your return on account is better. Just incredible, right? So, what's the deal? Well, again, I actually did get fooled by this. I was working on a concept that I keep going back to, the so-called day trade mega strategy, where I'm just looking at buying and selling on limit orders, X% below each opening bar, or above each opening bar for sells. Limit orders, and picking my distance according to what average ranges are, given a percentage of those ranges. Nothing too esoteric at all. Very simple. And I was just getting my simple numbers like I always do. And, refining it, making the numbers a little better, and getting really encouraged that maybe this time there's something in this weird concept. Then I made the fatal mistake of adding this. Dealt with this before. It's a canned strategy command in TradeStation, set percent trailing. You set two things. You set the minimum profit level that it needs to get to, the ongoing trade, before it triggers or before it can trigger. And then you set a percentage that it backs off of that, downward from a long you're in, upward from a short. And there's just an inherent problem with that, okay? And the problem is, if you're looking at a completed 5-minute bar, like this one here, you're going to assume that this low here was the setup, and then when it backed off up to here, that's the execution. But it's very possible that in the live trade, the trigger could have been met here, and then the backup was somewhere up here, or here and here. You get the idea. So you're just kind of anticipating what was going on within that 5-minute bar. How many back-offs were there within that 5 minutes? and it starts to dawn on you, you're probably getting a highly, highly inaccurate picture. Now, we can make it a little more reliable using another TradeStation function, the use look inside bar testing function. And you can set the look inside the bars to 1 minute. Okay, I'm not exactly sure how they work out their interval, but stands to reason they're going to be looking at about 1/5 the distance several times that they were before you turn that on, right? They're going to narrow it down to 1 minute inside the bars. So you should do better accuracy-wise, but as expected, you're giving up some of the pipe dream. About half of it, as it turns out. Okay? Your net profit is about half. Your average trade is about half. Your other figures aren't affected that much, but you know that you're way off in your initial assessment. Can you rest easy at that point that you got it right now, though? Well, at that point, I know that I've been fooled again by that percent trailing thing. In fact, I've used it before and sort of forgotten about the mishaps. And over the years, I have invented my own custom-made crude approximation of a trailing stop, but it's very clumsy. It's like I have to look at if I'm in the same bar as the entry, then I'm looking at the highs, lows, just this bar. If I'm 1 bar out since the inception, then it's the highest of the last 2 bar highs, and 3 bars, the highest of the last 3 bars high, and I got to code each of those scenarios individually, and I'm sure there's a better, more streamlined way to do it. But again, I've never claimed to be that proficient at math or programming. But I do know when I'm going down a path that has to be investigated further. So going back to that formatting strategies function, they do also have 1 second. Now, whereas 1 minute is going to let you look back for the 5 years or 10 years that most of us are looking at, forget about the 1 second. I'll just tell you right now, ain't going to happen. Your computer's going to freak. So what to do? Well, all I really want to know is, just looking at a tiny sampling, do you get similar results between 1 minute and 1 second? The way to do that is just look at a handful of days, 4 days back. Okay, break it down into individual day performances. So with the 1 minute on, we've got $175 profit on the 28th, 0 profit loss on the 27th, and $225 profit on the 26th. So what about when we change that to 1 second? Not even close. So at that point, I know that I've got to get completely out of that percent trailing stop nonsense and go back to the drawing board. So the moral of the story, if it's too good to be true, it probably is. I've stressed this theme several times in talking to you. I don't think you can ever get too much of it. Here I am, somebody that's been doing this for 30 years, and I get caught up in the excitement of finding something bogus anyway. If the source of the distortion isn't immediately obvious, keep looking. Sometimes it's a lot of work, but it's better than losing your money committing to a pipe dream, right? Okay. Market Beaters, another reissue that I have out there now. It's got a bonus Richard Dennis chapter. And thanks for joining me. See you next time.